should you do? Perhaps, is it a buying opportunity? Joining me now, Heritage Capital President Paul Schatz with more on where you should look to invest over the next 4 years. Welcome to you, Paul.
Hi, Lori.
So listening to Sandra's trade on gold and how people are probably trying to shore up profits given the uncertainty and the big sell-off in the equities market, I got to tell you, I'm actually thinking about gold here and feeling a little more bullish on it. What do you think, especially, again, with Lord knows what's coming around the bend?
I think if you just looked at Obama-Romney, certainly Obama is bullish gold and Romney is bearish gold for the obvious reasons of spending and cutting. But there are other things at play. I think gold's going up. Probably not. It's probably not going to $5,000 an ounce anytime soon. But I think on balance, especially if you can buy gold closer to 1,600, 1,625, I think it's a safer play. I think in the short term, maybe we've got some more weakness, but I think gold is a good piece of the portfolio, not for next year, but for the year after and the year after that.
Okay, fair point. So what's going on with the equities market? We're down 265 on the Dow, so we've made up already about 100 points. Volatility back in play. Where do you see this session? Let's start here, short term wrapping up.
And first, you know, I thought as they announced Obama won, the futures were down about 1%, and they rallied all the way to to 5 in the morning. So when I woke up at 6, we were up a little bit on the S&P futures, and then when Draghi came out shortly thereafter, that's when the markets really unraveled. I would attribute today's sell-off more to Draghi than Obama, and that's because the bank stocks are being hit hard, and the discretionary stocks are on a relative basis pretty good. And
I don't know. I think Euro fear is getting old, though. I have to be honest with you. This has been priced in for so many years at this point, and why is it rearing its ugly head today, per your outlook? You know, right on the in the wake and the aftermath of a disappointing presidential election, at least by Wall Street's view.
You know, it's amazing, and this is such a trite comment, but it only matters when it matters, and when it does, it really matters. You know, markets ebb and flow, and which news is deemed really important and appropriate for the day.
Yeah.
So
all right,
today, that's where we are. I think on balance, the S&P is probably going to pull back to 1375 to 1390 over the next week to 10 days. I think we'll form a bottom there, and I think we'll begin that traditional year-end rally. So short term, we see some weakness. Then I think you have an opportunity to rally for a few weeks to a few months. But then I'm really concerned. First, I was concerned anyway, no matter who is president, it's pick your pain. Do you want austerity? Do you want tax increases? Do you want a little of both? I think we're going to have a recession in 13 or 14. It's going to be mild. So I think you have to really, really thread the needle with your portfolio. It's not time to load the boat on any one outcome. I think you have to have a little gold. You've got to have some treasuries and certainly some equity sectors involved.
Well, that's how people are playing this market today, Paul. Thanks so much. Paul Schatz.
Thank you.
That's good news.